In this presentation, we will continue on with part 4 of our example problem related to a not-for-profit hospital, this time putting together a statement of operations. The statement of operations is going to be similar to an income statement in a for-profit type of organization. It's going to be measuring performance, measuring how we have done over time. We're going to have the information on the left-hand side. We're going to be constructing our statement of operations on the right-hand side. The trial balance is going to be in order of assets up top in green. Then we have the liabilities in orange. We have what would be the equity section in a for-profit type of organization, here being the net assets section in our not-for-profit hospital. And then down below within the dark blue, we have what would be the income statement type of accounts, those revenue and expense type of accounts, resulting in the bottom line, that net income number in a for-profit type of organization. Them here we're going to be focusing on because those are the area that's going to be constructing the statement of operations. So we're going to be constructing the statement of operations, of course, concentrating on these dark blue numbers down below, revenue and expense type numbers, the temporary numbers, the numbers that deal with timing. The statement of operations is then going to be starting with the revenue without donor restrictions. That's going to include the patient service revenue. So the patient service revenue is going to be up top, where we have the 3502800. We're going to be subtracting from the patient service revenue the contractual adjustments, which is kind of like a contra revenue account, minus the 1528000, and that's going to give us the 1,974,800. So this is going to be, once again, kind of like a contra revenue. It looks like an expense here, but it's kind of like a contra revenue, kind of like returns and allowances in a for-profit type of organization. Then we're going to be having the other operating revenues in a credit balance here. Of course, they're going to be on the inner column here. No debits and credits. They're on the inner column because it's a subcategory, not because it's representing any type of debit and credit. That then is going to give us the total revenues as we add up the 1,974,800 and the 1,003,555. Then we have the expenses. The expenses will be including the administrative expense. So we're going to pull over the administrative expense. We're going to pull over the general service expense. Notice that these expenses are being reported in essence by nature, not by function. We're not seeing telephone expense and whatnot. We're seeing the actual grouping of what those expenses were used for by the function of them. Then we have the nursing service expense. And then we have the other professional service expense. So we're going to pull over all the expense items, and then we're going to add them up to the outer column, that providing us with the total expenses. Next line item is going to be the excess of revenues over expenses. You'll note that the total revenues is here, the total expenses is here. Subtracting those two out gives us the 81,380. This is kind of like the net income or bottom line number from the general type of operations type of number. Then we're going to have the non-operating gains and losses, that including the investment income without donor restrictions of the 9,980. So the 9,980 here increasing. Then if we add the 81,360 and the 9,980, we get to the bottom line number of the 91,340. And this is going to be called the excess of revenue and gains over expenses. So that's kind of like a net income type of number, but it's pretty descriptive, right? The excess of revenues, the revenues and gains over the expenses is the 91,340. You'll note what is not included in here is the unrealized loss on investment. This number here, not included. So in other words, we would expect to be getting down to our bottom line number of the 90,659, which would be the sum credits minus the debits, revenue minus expenses, in essence, of all these dark blue numbers to get to that 90,659. We're not there. We're at the 91,340. The difference between the two, 90,659, is that 681. So we're not including, in other words, the statement of operations, that 681. So beware of that. We will touch on this in a future report. So then we're going to have the net assets released from restrictions. That's going to be including the 97,500. So the net assets that are released from restriction are, of course, with regards to these two accounts down here, the ones that were restricted represented with the with restriction, it then going down with a debit, and increasing the one without restrictions. So you can kind of think of this number as being the credit balance that we're now adding here, because it's going to be increasing because it's released from restrictions. So once again, this is the excess of revenue and gains over expenses, kind of like the net income type number, which does not include the unrealized gain. And now we're going to add to it the satisfaction of the purpose restricted items, which are going to increase this number to 188,840. So notice that doesn't tie out to this number, because obviously these two basically typically cancel each other out. What this number here is close to this number, but it's different by the 681. And then we added to it the amount that was unrestricted to get to the increase in net assets without restrictions. So the increase in net assets without restrictions, in other words, is going to be kind of like the net income number, excess of revenues and gains, plus the amount of the items that were released from restriction to get to this 188,840. So these are the two reports we have so far, the balance sheet and the statement of operations. Now the statement of operations here in the not-for-profit hospital isn't exactly complete in terms of the timing accounts, because we're really going to need the next statement we'll do next time, which is going to be the statement of change in net assets. So the statement of operations and the statement of change in net assets will give us the kind of timing activity that has happened, the performance type of data that we're looking for, similar to an income statement for a for-profit organization.